All right, we should be live. Just give me a quick confirmation in the chat that you can hear my voice okay, and you can see my screen, please. All right, all good, yeah. Audio is good, screen is good. I've just finished setting up my mic again. Fantastic. Good stuff, good stuff. Awesome. Well, as always, thank you for tuning in once again to June's Bitcoin market review. As always, anything said in today's video is not financial advice. It is just my view of the markets, and primarily the focus is on trading Bitcoin in terms of the futures pair. Okay, I'm not talking about spot positioning. I'm not talking about long-term investments or holding. Absolutely, Bitcoin, as with every other major indices and asset class out there in terms of the SPX, NASDAQ, Bitcoin, I think they're all going significantly higher over the next 5 to 10 years. Markets generally tend to go up and to the right. So I think from an investment perspective, if you want that type of content, then certainly this isn't the place. My emphasis with these streams is really just to talk about trading ranges or trading the trend, how I'm looking to trade markets overall, more from a educational perspective, very rarely from a spot perspective. Okay. So let's kick off the stream. I think let's really keep it simple to begin with. And one of the most simplest ways that you can understand context is by using the moving averages. Now, if we look at the 12 and the 25 weekly EMA, at what point in the market have we had a real show of weakness? We haven't, okay? Since we flipped this 30K level, price has retained or remained in a bullish trend, and every time where we have traded under the 12 and 25 weekly bands, the key aspect, and something that I've iterated on streams many times, is that it doesn't matter if price trades below the bands, okay? We never got a crossover of the bands. And secondly, the other aspect is every time we have lost the bands, okay, we've generally consolidated under the bands, and the first show of strength is when price, just as it did back in February 2023, is reclaimed back above the bands. And again, you can see how price, if I just zoom into the charts, it's something that I've covered on stream throughout the last 12 months, that every time there's been a correction and we compress under the bands and we reclaim the weekly bands, we see continuation higher, okay? The same happened here. Back in the summer of 2024, we had a period of range-bound price action. In a range-bound environment, okay, price comes off a trend. It's either going to distribute or consolidate, okay? And when you see price consolidating but no real continuation in terms of breakdown, you want to be buying up these lows here, okay? And what gives you further weight or reasoning to get behind the trend is acceptance back above the 12 and the 25 weekly EMAs. Okay, so that's the point that I want to make in terms of high time frame context. If you go to my stream back in March or early April, one of the key things that I talked about when price, I believe, was trading in this region over here, is this pivotal area here, this compression before we saw expansion higher. That was the previous all-time highs on the left. Okay, this compression into expansion was the demand zone that I clearly talked about in terms of this is the level that I'm looking to reload or pick up some spot plays, okay? We've had a very good reaction from there. Okay, we've had a significant consolidation, a thrust up, another consolidation, another thrust up, consolidation, and finally up at the highs. Yes, we've traded above the highs. We've traded back below. Taking out these lows here, okay, that 100 level is essentially what I've been talking about on the timeline. We've had a very good reaction from there, helped by the fact with the Elon Musk, Donald Trump spat. I think the key observation for me here was the fact that equities and Nasdaq wasn't really selling off whilst Bitcoin was trading lower down. So that for me was just a shaking out of positions, running these lows here, and we've seen a fairly good bid back up. Now again, we were talking about the weekly time frame. There's nothing here just yet, in my opinion, to be concerned about when it comes to the overall structure of the trend is very good, okay? At no point in time have I had any real concern that, okay, we're about to drop into a bear market or go significantly lower. And that has been my stance, and it continues to be my stance since the moment we've traded above 30K. The only time or the only period that I'm looking for shorts is hedging at range highs, okay? This is the only logical area that I've really considered shorts from hedging against my spot holdings. Every time prices traded above that level, let go of the hedge, let spot carry on doing the legwork for your portfolio, okay? That's the only thing that I can add with regards to how I'm managing my spot positioning. But the overall trend is very, very positive. Now, when we go into the 3-day chart, again, every consolidation within a range, okay, and you often get the chop of the moving averages. This is the consolidation and type of the chop that you will see. Many people struggle to trade. But the way to trade this is to keep it very simple in terms of just looking at the extremities. Do not, if you cannot trade the lower time frames, then do not trade the lower time frames unless you have a proven edge or you have a positive expectancy in trading price action in these intraday, intra-week moves. But really where you want to be focusing upon is at the extremities of a range, because they are your high time inflection points. And so what you generally have is in a range bound environment, when you see the moving averages, price trades below it, gets above, gets below, gets above, okay? There's a lot of what people would consider chop. But if you're a range trader like I am, okay, where you've got a range between 54,000 and 72, and the fact that price was in this range from March all the way through to November, these are some very, very good trading opportunities. I'm not talking about investments, purely talking about from a range trading perspective. These are some of the best opportunities that you were going to get to trade the market. But the key thing is, there wasn't really any sign of weakness. Because generally when there is a sign of weakness, and we do have a form of a, loss of trend, and there's a shift in trend, then you really would see expansion from the bands with acceleration, with the flows into the next objective level in terms of demand. But when you see price oscillate and gravitate and rotate back and forth to the mean being the middle, okay, clearly illustrates the fact that we are in a trending environment, and that you shouldn't get too caught up on the moving averages crossing under or crossing over until you have a clean break of the range. Because when you have a clean break of the range, what do you see from the moving averages? Well, it's very simple. You do not want to be on the wrong side of the trend, because if you look at the velocity and the trajectory of the bands, this is the direction that you want to be flowing with until momentum stalls, price develops a range. Then you can start thinking about taking profits or hedging at the highs, and you're looking to play the longs from the range lows until you get acceptance out of the range, okay? And so in this instance, when I look at a price here, once again, just keeping it very simple, it's trading within the upper bound of the range, and these are our range lows. This is all I'm focusing on at this moment in time. Until there's a shift in context, until there's a break out of this range with high volume, you want to be flowing with that trend higher, okay? You do not want to be shorting the momentum if price starts trading above this level. You might get a breakout, okay, of this level, a pullback, okay? Many people will start calling this a deviation, but like I've illustrated previously, is that sometimes when you have price drop back into a range, you'll have people fading this or shorting this. And if it's short-lived in terms of it can't push down any lower, the minute this starts pushing back up, they will add or serve as fuel for the move up higher, okay? And we kind of saw that happen last year in November, because if you look at the range highs here, it's very easy to think, oh, look, you know, we've potentially got a swing fail at this level. We've just taken the highs. Let me start shorting this. But really, objectively, when you look at this, the fact that we've consolidated in a range for several months, and the fact that we are still trading above the mid of this range, gives me no real concern. And for those of you who watch my streams, the context was very clear. Start looking for higher prices. So what you have in this instance is, yes, you run the highs, just about, or an equal high, straight into the consolidation. Look at the thrust up. Okay, so the first candle out, and you see no pullbacks and continuation higher, all right? So in this instance, again, it becomes very dangerous trying to fade this move if it's going to go higher. You might be fortunate if you get the pullback, but even still, even if you do get the pullback above these highs, all right, price pushes up, pulls back inside, it's very easy to assume, right, that's the deviation, that's a short. But bear in mind that if this is short-lived, it's not going to fuck about. It's going to keep on going significantly higher, and there will be a shift in the trend. So when you now pull it back and look at the moving averages again, even on the 3-day chart, and I'm just illustrating context using something as simple as a set of moving averages to keep you on the right side of the market as the market trends. You can see in this instance, okay, we've traded above the bands, we've traded under, and we're back above those bands, okay? For as long as price is above the 3-day bands, I don't have any concerns. Any selling off into 95s or 100s is, or what I perceive to be, an opportunity to position into another long again, okay? And that's just purely based upon the high time frame context. Is that clear? Any questions so far? And even when you look at the daily trend, okay, if there was real inherent weakness in terms of the sell-off that we had from the other day, well, whatever weakness there was, as we were compressing between these two bands, if I now run this forward, okay, this would have capped price as resistance. If we were going to reject, we would have rejected from this level here, from a daily perspective. We've taken out these lows here. My level, the level that I wanted to long, was the single prints that I talked about. So what is a single print? It's where you have price inefficiency, or there's an imbalance of price, and you have a thin area. Okay, all this here was a thin area in terms of price. That's what I wanted to see price trade into. We pretty much tagged the top of the single prints, closed back inside, acting as a daily swing fail of this level. That for me was the reason to buy. Now, if there was resistance here, if this was to be a shift in context, then I suspect this level should have held, and we could have then at that point traded into trend continuation, where you've got a low, a lower low, a lower high, okay, followed by rejection into another lower low. Then you could have said, right, we're into 97s and 95s. But when you look at the context of price, the fact that we have not only just pushed back up into the bands, that's a fairly significant move back above the bands, okay? And so now, just using the basic principles of the 1225 EMA, which would have kept you on the right side of the market. Again, when you're breaking down on the dailies, okay, in a range bound environment, you can see the chop. You want to be focusing at the extremities or the key support or demand zones here. The minute you lose that with the reversion back into the bands, this was that throwback into this range bound distribution environment before we saw 1, 2, 3 drives at the lows into this demand zone, pushes back above, look at the compression above the bands, then you start flowing with momentum, okay? And it's the same here. There's no real sign of weakness until price starts trading back below those bands again for me. And if it does, even if we do take out these highs and trade it back above and below, then that just tells me that, all right, we are likely then to remain in a range bound environment, and that is likely to be the focus for the remainder of Q2 heading into Q3. And so that's kind of the high time frame context, what I'm looking at and what I'm looking for, where should price trade the highs, I'm going to be looking for a potential risk scenario where I can go defensive. Should price break above the highs, pull back, show continuation. So you've got a lot of people wanting to short a potential deviation, but that aggressive selling on the order flow is being absorbed. So there's a lot of effort, okay? In terms of effort, I'll give you an example here. So one of the things that I talked about on the timeline back in, I believe when we had these highs here, okay? From 109s to 112s. One of the key things that I talked about on the timeline was that there's a lot of aggression in terms of buying. There's a real effort to lift the offers, okay? But there's no continuation. So the amount of effort and the amount of momentum to get price to break high, it should have taken off. So all that aggressive buying up here, we're just slamming into these passive asks, okay, who are reloading. So essentially that is a sign of absorption. You could potentially call it exhaustion as well, because price started, the aggression and the flow started slowing down, the tape speed slows down in that environment. And so you'd realize that, hang on a minute, there's a possible shift of context here, because if you look at the candle structure, what was capping price up at the highs, okay? Despite the fact that aggressive longs kept buying this up, buying this up, buying this up into these passive asks, they were being absorbed. And so once these aggressive buyers, okay, and aggressive buyers doesn't necessarily equate to just long positions opening. It can also include anybody who's shorting this. Well, they become forced buyers because they have to close out their position, which fuels the move even higher. Okay, so it's not always just new longs are opening. It can also be a combination of, well, anybody who's offside is puking their position, therefore becoming a buyer to close out their trade. Does that make sense? So when you see people talking about longs are trapped, not necessarily, they're not always new positions or fresh positions that are being opened. It could be a combination of shorts closing, longs opening. And the way you can ascertain that is generally by looking at the open interest and the CVD to get an idea or a ballpark idea, you know, as to what the flows are telling you under the hood. And so what happens when you don't get continuation? You get an unwinding of positions, okay? And then you've got to think to yourself, well, okay, if price is breaking down here, what's the real objective of price? For me, it was coming back into that 102 to 100 level. Okay, you got the single prints here. Price trades into that zone. And so you can see the momentum in terms of structure. If I just pause price, one of the key things that you want to be looking for on these moves up, and you'll be amazed how clean price action is on the way up, because you never really break structure. You've got a higher lows, equal lows, there or thereabouts, okay? Really wouldn't call this a break in structure. It's just another higher low in context to this. So if you notice how close price comes, right, in terms of looking to take out the level, but it just falls short. And so you get continuation higher. And then the same again. It's almost a level of compression here, right? Because you've got price. It's not really a range. It's more of a compression. And then it pushes up again. And then what do you have? At this level, the same happens again. You've got high low, another high low, another high low. So if you notice, if you look at the subtleties of market structure or microstructure in this instance, so, well, market structure because we're on the 4-hour chart, but I'll talk about microstructure very shortly. You can see how price is still respecting these lows. And so if there is a pullback, you're either going to get a higher low or you want to see a swing fail that's very short-lived, because what you do not want to see is price retesting the underside and then pushing away. Then you've got a problem, okay? So bearing in mind, you will see this, and this is a way to validate the overall context of price, what price is telling you. Okay, which direction do you want to be flowing with price? And so we get a level of resistance, capping price, and we start trading down, okay? Again, many people will be inclined to buy this because they think, oh, look, we're into this demand zone. But the concerning factor for me was this was, in terms of local structure, we shifted structure here, okay? This was your consolidation. This was your supply zone, right? That's your supply zone up here. This was the range bound area. We broke below the range. We're pushing away. Respecting structure, okay? Don't mind a push up back up into here, then drop down again, okay? The minute this happens and we get back under, that's kind of your context, so your trigger that we're about to go lower to take out these lows here, potentially trade into these lows. And so you get that push. We take out these highs here. We trade into 107s. The fact that we start getting back into this zone here, and we can't seem to push back above this zone here, is where you want to pay attention. Okay, there you go. That was it. Now, the beauty of this chart here was that if I just remove everything, and in terms of context, what is this candle here? What does that look like to you? What candle, what do we call this candle type? The fact that we have taken out all the lows here, we've closed back inside. Is this or is this not a bullish pin bar close on the 4-hour chart? Okay, and even when you look at the daily, that was a daily swing fail. So you have a clear invalidation point to get long upon acceptance back inside this range. And therefore, the range that we are trading, in my opinion, is from A to B. That's the range that I'm concerned with for the time being, okay? In terms of overall price structures. Until there's a shift of context. We're either going to get above here or we're going to get below here. Then we can start thinking about, you know, potentially trading back into 90K. Now, when you zoom out and you map price across the line at these highs, okay, and at this low, this is your mid-level, effectively, okay? It doesn't get any cleaner than that. You have a series of lows being respected. You have, wouldn't call these the cleanest of highs, but I prefer this high now because this is the latest level. Now, in terms of swing fail, the previous swing fail was this. Well, not so much a swing fail, but taking out the highs, okay? And then rejecting from this supply zone. So in terms of context, in terms of structure, in terms of pattern, that's the range that I'm paying attention to. Where anything outside is either likely to be an opportunity for trend continuation, or we always have to be aware of, could this potentially revert from this level back into the mid or back into 105s, all right? So if I now map this out in terms of forming the overall range, this is my immediate range low, and this is all I'm focusing in terms of context because this is where the majority of the price action has been. And then this serving as my range high. This particular level here on the left is where we traded above, got back below, we had the perfect underside retest, we sold off into the mid of this range. From 100 to 109 is the range that I talked about to look out for and the range that I'm looking to trade. All right, if you go to my tweet on Sunday the 1st or whenever it was, Monday the 2nd, this is what I talked about in terms of what I'm looking at in terms of price is for price to trade into the single prints, either 100s or 97s. This previous last high pre-break, okay, was the level or this level here. And overall, in terms of what I'm looking at is from A to B. That's it. Everything else in between for me is noise. Okay, I'm not interested in trading. I'm only interested in positioning here or down at these lows here. 3 zones that I'm looking to trade to keep it very simple. let's push on now, okay? So the previous supply zone was between 109.7 into 112s. Okay, we're at 110.2 at this moment in time. When you look at the 1 hour chart, again, very simple structural aspects of price will tell you that lower high, lower high, lower high. At what point have we broken structure to the downside to suggest that, all right, there's a chance now that we could get a pullback? There hasn't been anything. And so even with a simple set of moving averages, again, even if you just look at the 1 hour time frame, the trend is keeping you on the right side of the market, whichever way you look at it. Even the 4 hour. There's nothing here to suggest that I want to be selling this or look for rejections at this level. Look at the trend continuation. We're heading back into or towards now this key zone here where we had the previous supply zone. This is where the market sold off previously. So I suspect at some point, probably today, that we will take out this high or get very close to taking the high out. After that, I can't get euphoric. I'm not going to fall into the trap. I think you just have to remain level-headed. You will see a lot of, again, sentiment shift at these highs, okay? People start getting excited. You'll start people talking about 140K targets, okay? Which is all fine, which is all well and good. I'm sure we will get there eventually. But as a trader, I want to remain cognizant of the fact that we have CPI on Wednesday, right? We've had quite the extensive move today in terms of Monday's range. So what I'm looking at is not areas where I can short from, but areas where I can possibly see a pullback and I can look to buy. Or if there's a shift in structure, then where do I need to be more defensive and start playing this range again, okay, that we're in. Because that's all we're in. We are still within this range. Until that changes, until there's a shift in context, can I have confidence that we're going to go up to 120s, 130s, okay? That's the target. My target was around about 125, 130. From the high time frame chart, that's the level that I want to see traded, up there. So for now, as far as I'm concerned, it's still a range, okay? And the fact that we've not really had any meaningful pullback from this level here, okay? It's, again, the risk to reward was fantastic. The risk to reward appears shocking for longs, okay? Because at some point, whether this takes the highs, there will be a pullback. I'd much rather wait for the pullback if I don't have a long position to consider getting back into the position again, okay? If I don't have a position. Thankfully I do, okay? But if I didn't, I would not be chasing this, because now you've got to ask yourself, if you look at the origin of this move up, okay? Rally, consolidation, another rally. I don't want to be chasing this. You want to be chasing the consolidations at the bases in line with a set of moving averages or supports. You get the breakup of this previous consolidation area, we go back into the highs, all right? So here, you just want to be cautious around this 110 level. Now, when I say cautious, I'm talking about the fact that opening fresh longs into resistance. And again, when you look at Bitcoin, I can give you a number of instances where these types of moves have happened time and time again. And again, when we get at the highs, when we come to the highs, there's a real shift in sentiment. But you've really got to be watching the flows here to see what's happening. Are aggressive buyers being absorbed again? Okay? A lot of aggressive selling on the way up. From shorts, even down here where this clearly looks like a classic TWAP, okay? They were just being absorbed by passive bids. So basically what was happening in this instance was that when I was watching the flow here, is that passive bids were absorbing, okay, any aggressive selling. So when sellers are stepping into the market trying to push price down, all that effort is just being absorbed by these passive bids. And then at the same time, whilst these passive bids are holding price and absorbing any aggressive selling, you've got market buy orders which is pushing price higher. And so when market orders are also coming in and price is being supported by passive bids, what do you think is going to happen to anybody who say shorted this here and their stop is there? Well, they're going to get tagged offside, right? When they get tagged offside, they're going to cause this price to push higher. Okay. So again, it was a classic case of aggressive buying supported by passive bids. And again, anybody who's looking to aggressively short this, there was a lot of aggression in terms of shorting this down candle here for not much reward. And so when they're offside, you can even see from the price action in terms of the candle bodies here, how price kept rejecting this level here. And eventually, once it pops through, well, it's a combination of intraday breakout traders combined with anybody who's tried to short this has got stopped out, causing price to push up higher. Okay. And so now we're into this key area of supply where the market broke down previously, not a level where I would get bullish into in terms of opening a new position. If anything, I've been scaling out of my perps longs here, okay? But what I've just said in terms of the flows of price, how once you get this aggressive sell-off and price is being bid up, right? And it's absorbing any aggressive selling by passive limits and market orders are lifting the offers, that's what you want to be watching for in the flow. But why is all this aggressive selling unable to push price? You can watch it on the tape. You can watch it on the DOM. You can see it on the footprints. But price is still going higher. And we're respecting market structure. Just give me 2 seconds, guys. I just want to pop something open. Any questions so far before I start zoning in on the lower time frame price action? I'm just going through the questions here. Sorry if I'm just taking a minute out. No, we're not swing failing right now. For me, this isn't a swing fail. This is something that you don't want to fucking fade. That's where it is. And the problem is, believe me, because I've made my fair share of mistakes over the years when I'm trying to short an aggressive market. I've learned from my mistakes over the years. That's why I say the trader that I was in 21, 22, I've evolved, even from 2023. I don't look back at 21, 22, 23 and think, oh yeah, you know, I'm still the same trader. Bullshit. It's like you have to evolve. You have to learn as you gain more screen time, okay? Manuel, do you suggest to I wouldn't suggest anything. It's up to you to make that decision. I've been taking profit because in 4 days, we've gone from 100 to 110. Thank you very much. I'll definitely pay myself. You know, for me, it's a range until it's proven otherwise. If we get the breakout, the beauty of being a fluid trader is I know how to get back into a position if we're going to trade out. If we're going to fake out the highs, okay, which I'll cover this scenario, then I know exactly where to get defensive with a stop at the highs. If it's going to go higher, I know if it starts pushing back up towards here and reclaims this level, I need to get the fuck out of the trade, punt a stop here, go long, look for the breakout trade into thin air, okay? Then you will get trend continuation higher. But what I will tell you is that, again, my point about shorting the markets, in the charity mentorship that I've been running, I've been going over this with members in there, right? How to stay on side. Because look, what generally happens is, it's all easy to think, oh, look, you know, this has been an extensive move today on price. Let me start shorting this, right? It's easy to get sucked up or sucked into that mentality. But the reality is, even if you just look at this here, let me just bring up another chart, in fact. The reality is, look, even just with a simple set of moving averages, right? You will not, again, when you look at price action here, we're still being supported by the bands. And even when you look at price action, what you really want to be seeing is a low time frame range, okay? This then gives you more reason that, hang on a minute, if you look at this, this was on the 22nd of May. And we traded here for the best part of 2-3 days. Okay, 2 days, right? But look at the range bound environment that we had. And then look at the lower time frame shift. You want to at least wait on the lower time frames for a shift in that context to give you a reason that, hang on a minute, is this consolidation before the move higher, or is this now becoming, keyword here, low time frame distribution within this leg here? And so one of the things that I've covered at the start of the stream is that, well, when you see the trajectory of price, you don't want to be fading this, right? You do not want to be stepping in front of this. But when you see price print a high and a low, and then equal highs, there's a fairly decent chance that if you can start gravitating or oscillating back into here, you've got a nice range formed now for once. Now the question is this breakout continuation, or are we to start trading lower down? And this is then where your mid-level comes into play. You've got your mid-level, okay? If this was bullish, after contesting these lows once, twice, reclaims the mid, but it fails to hold, that's your short there with the stop at the highs. You're selling 111s with a stop at 112s until you see price find acceptance back above this high here, okay? And when you look across the line, what happened? We sold off. Okay? You've got more time than you think when it comes to becoming defensive or switching context, in the view that we might just retrace this move up that we've had. We might just retrace down here over the coming week or so. And now when you look at this, we've essentially filled in all this inefficiency on the way down. This was the origin for the entirety of this move down here. This point up here was this leg down here. By reclaiming this level, that's where we are. And this here was for buying at these lows. So now I'm leaning into becoming defensive or taking profits. I'm not looking to open new longs here. And that's the problem, right? The thing is, if you try and fade this, you might get lucky, you might get away with it. But in terms of my own system, when I look at this, according to my system, I can't fade this, right? The 2021 EXO would have probably started thinking of shorting this. And by shorting it, I probably would have had to stop at these highs here. I would have got taken out and price goes higher. Fine, I get the risk to reward behind it. But have we, at any point in time, developed a range? Even here, no, we haven't. This has been a clean trend. Compression, expansion, okay? Until there's a range formed here, and there's a slowdown in momentum, can I then think about, all right, I think we're stalling out here. Over the next 12, 24 hours, if we're just consolidating and oscillating in between 109 and 111, then I can say, all right, that there's possible cause here to start thinking about becoming defensive because we are stalling at these highs. We've got CPI on Wednesday. Maybe we're going to see a level of hedging into the market, okay? Or maybe those hedges come off. So if there is a correction, then where am I targeting? Well, it's very simple for me. I'm targeting effectively, if we bring back our range, I'm targeting this mid zone here. That's the range that I'm looking to trade, where this is the supply zone up here. And for me, we are still in a range, okay? As far as I'm concerned, low time frame, it's a range. High time frame, it's a range. And so therefore, I'm anticipating, further rotations until we have a breakout of this range here, okay? Now, what I want to bring your attention to is Bitcoin has this habit where it does these types of moves, right? Price, it's been rallying, it distributes for a bit, sometimes you get a random retest, it breaks down, consolidates, okay? So sells off, reconsolidates, sells off again, takes out some low here, okay? And then what it does, it just retests. All this move down here, it just does something like this. And then bang. And then again. And then it'll trade the highs. Everybody gets excited. And it comes back all the way down again. And what I don't like about this move is all this. Which makes it very easy for price to come all the way back down. And I'll give you an example of this. Right there. Again, when you look at the move here, once again, what has Bitcoin done? Taking out all the respective lows into this demand zone here. Okay? Cleaned it all up. All these lows here got wiped out. Rally. Okay? 4 hour. Compression. Is there any pullback? No, there isn't. If you look at the market structure, high low, high low, high low, another high low, another high low. Shorts keep piling in. They're offside. Everybody, shorts trying to push this down, but they're getting absorbed and price is pushing higher. So if you look at the aggression of this move, go to the 4 hour. And then boom, you just get a fairly aggressive sell-off. You get a move up, okay? And again, this was at the highs. It's very easy to get carried away thinking, you know what, game on. We're going much higher. Then the key thing is, look at all this range-bound price action within here. So we didn't get the trend continuation. We got a swing fail. We sold off. We pushed back up. But really, when you look under the hood, instead of trying to short this here, here, and here, and then here, right? You've got more time than you think because you have a clearly defined range. And until there's a clear breakout, okay, this is your supply zone here, which is capping price. This is your demand zone or your local range. You can easily latch onto the tail side of it. The point I'm trying to make is you have a lot more time than you think. As with this example here, into price discovery, look at the loss of momentum for the best part of 2 days, right? We can't seem to get any candle closes above here. And so then what does price do? It comes all the way back down into the lows. And then from the lows, what does price do? Back into the highs. Consolidates, redistributes, trades into 101s. We've got all this to fill in if it's going to come lower down. So you can see how choppy price action has been. And then we're back into the demand zone, still within that range. So the point of what I just showed you there is that don't get too aggressive when you're trying to fade these moves. It's not worth it, okay? Death by 1,000 cuts. Now, any good trader will be aware of the downside scenario or the downside risk, okay? This isn't about being bearish or bullish, okay? I practically couldn't give a fuck about being bearish or bullish. Those words are not in my strategy. It's not part of my vocabulary. If I see a setup, I will take that setup. If I see price come to the range highs, I'll get defensive. If I see price come to the range lows, I'll be aggressive. That's it, okay? Whether I'm selling or whether I'm buying, it all depends on context. Now, I want to bring your attention to this fractal here. And I call it a fractal because when you look at the weekly chart on Bitcoin, one thing I want you to remember is when price sold off here, there was already concerns about the economy, okay? There was already concerns about interest rates, inflation. There was talks about the Fed tapering, okay? We weren't even cutting rates at this point. So for me, the reason why I became bearish at these highs, okay, is because of the shift in policy, the talk of tapering. And so for me, that's when I became very aggressively defensive, because we took out these highs, we find acceptance back inside. If I'm going to get back into the market as a buyer, price has to prove to me that, all right, XO, for you to buy back into the market, the fact that you've hedged here, you sold here, I'm looking for price to get back above this level. That's all there is to it. Why the fuck would I want to incur significant drawdown on the way down when price is already showing me that, hang on a minute, there's a problem here. Why are we not pushing higher? Until this can get back above here, fine, let's go. We can all celebrate. But I'm not going to be celebrating holding a spot bag and watching this come all the way down back into these lows here. And so rule number one, as a trader, it's about preserving your capital. By preserving your capital and not blowing out or incurring significant losses, can you only then make profits and realize profits and pay yourself? Because if you're going to incur losses and significant drawdown, how the fuck are you ever going to make money? And again, I'm not talking from being a long-term investor. If you're a long-term investor, send your Bitcoins to a cold wallet and just leave them there for 10, 15 years. You'll be absolutely fine. Okay? I've got a stash of Bitcoin that I'm not going to touch anymore. That's it. But I still believe that as a trader, I can make very good money. And by making good money, I'm buying more Bitcoin with those profits, essentially. That's all I'm looking to do. But the key thing is, the key thing here, you have to be aware of the downside. Now, why I'm bringing this to your attention, I'm not really big on fractals, but so don't misunderstand or misinterpret what I'm telling you here. The whole point of this next exercise is really how to make you think objectively on what are the risks. If you see any impending risks from a price action perspective, then how the fuck can you take action? As opposed to just sitting there hoping price goes higher, but every day price is dropping lower. Now you are not willing to cut the trade because you're waiting for a bounce, which never comes. And then it drops even lower. And then before you know it, price is at 90K again. Right? As a trader, not talking about an investor here. So the point I want to make is, well, again, when you look at price action here, what did we do in 2021? We took out these highs. Very similar price action to what we've just had, okay? Not only did we take out the highs, but a real fuck ton of effort. I remember trading this with the order flow. A real fuck ton of effort came in here. But what did we do? On the 4-hour chart, we sold off. We traded into these lows here. All right, brilliant buying opportunity. This has been holding up as support, right? Everybody's getting bullish here. We've got the breakout, new highs, woohoo. Let's fucking go. But we get back inside. We sell back off into demand. So now when you look at this, the immediate range, okay, even on a 1 hour time frame, is you're thinking to yourself, all right, look, we've got this low here. This is a higher low. These are higher lows. This is a equal lows here. I don't mind a swing fail. I'm back inside, and I think we're going to go straight to the highs. Or this is the lower, the higher low, which respects these lows here. So it's one of these two scenarios where I'm looking to long. For me, the easiest scenario is a swing fail, because then it tells me, like, right, if we swing fail these lows here, I know there's a chance that I won't get taken out unless price is ready to come lower down. Then I know that, fuck, it's time to get out. But when price stops here, it's like you're kind of scratching for an entry, because you don't know if you're going to get a swing fail lower down. And even if you do get a swing fail lower down and it rejects on the underside, you got problems, right? So this is why it's critical that you have a few variations of your execution strategy. Now, quite often, so many of you wait for the swing fail and it never comes, and it leaves you behind. Other times, you'll buy this and you'll get stopped out. Man up. Losing or being stopped out is part of the game. And taking small losses is part of the game. You have to get the fuck back into the trade. If you see price swing fail this, don't just bottle it because price has taken you out and you've taken a loss for the day, and you see a swing fail and get back inside. You've got to go with that. Okay, in terms of the order flow, if you see aggressive selling, okay, not shorts, aggressive selling, what does that mean? What does aggressive selling mean? Okay, so many people confuse aggressive selling or shorts are piling in here. No, aggressive selling means that, look, anybody who's got their stop under here or is long from here, they're going to puke their position. And you've probably got a fuck ton of passive bids waiting to soak up all that aggressive selling. Not necessarily shorts opening. Yes, it will be a combination of shorts, but it will also be a combination of anybody who tried to long this is going to capitulate and give up their position here because they think we're going to get a breakdown. But failure to get back inside, okay? Sorry, when you see price showing you a level of acceptance, you go and say, okay, why has price turned around from this level? Why are we now getting acceptance back inside here? Is it because there was a level of aggression that couldn't push the market lower down? Therefore, these sellers are exhausted, and it's time to step back inside because now the objective is to go back into the mid, and from the mid into the range high. Let's see what happens. Which scenario do we get? Anybody want to take a guess? Was it scenario number 1 where this is a lower high, or was it scenario 2 where we take out some of these lows, potentially this low here, then we wait for the trigger to go back inside? Or do we start scaling in here, stop at the low, we're going to get stopped out, and then we get the trigger to go back inside again? 2 attempts at taking the trade, okay? Which one are you going to pick? Number 1 or number 2? And number 3 is a cut and reverse, okay? I've talked about the cut and reverse exercise on my Substack. It's a very good exercise to practice switching context and switching bias. Number 3 would have been, all right, we break down, we test the underside, we start pushing lower down, stop at the highs. You want to see price start selling this. If we can take out these lows, we're going to go lower into this level, and then this demand zone down here at 54s, okay? That's what it would have been. So you got 2 trade setups. You can go long into the mid, or you can go short if you get a reason to go short. If you've had 1 or 2 attempts at this and this is failing, cut and reverse, go the other way. Right, let's run it forward. Let's see what we get. Look at that. You bought this. If I bought this, I would have got stopped out. Now I'm waiting to either get back into a long, and to get back into a long, well, guess what? I'm now going to reshift this lower down as my demand zone to be here. I need to see price get back above this level here now, okay? If we can't get back above here, I need to see get back above here before I can get a trigger. But again, already, what can you tell by looking at price? What is this price action showing you here? on the 1 hour time frame. Look at the wicks. Okay, look at the wicks on the candle and the candle bodies. Go to the 30-minute. Go to the 15-minute. You've got a level of compression into these lows. If this keeps compressing, then yeah, we're probably going to roll over lower down. But if we compress and push back above, that's going to be the block that needs to hold, or your demand zone that needs to hold. Your triggers above here at 59, you're targeting 63s. Okay, so understand price action by reading the candles as well. What are they showing you? What is this showing you, these wicks? That price is not being able to push down. It's been absorbed, or buyers are stepping into the market. Let's run it forward. Very, very choppy, all right? Still nothing clear in terms of context. We're not breaking below these lows here, nor are we finding acceptance above 59s. And this is the problem when you are looking to execute, because it's this part of the trade cycle where you've done your planning, you've done your prepping, now you've got to execute. Now you've got to put your balls on the line and execute and pull that trigger. But are your emotions going to make you panic? How many times in something like this would you have bought and cut? You buy here, it drops, you cut. You buy here, it drops, you cut. Okay? Your emotions are taking over. The reason your emotions are taking over is because you don't have a clear strategy. You do not have a clear execution strategy on how to get on board. It's on a 1 hour, but the point is on the lower time frame. Once you see acceptance, if this is a range, once you start pushing above, there's your long. Stop at 57.8, long at 59.3. You're targeting these highs, okay? So the scenario that played out was the swing fail scenario, because if you go to the 4 hour chart or even the daily chart, what do you have? You have almost a swing failure of these lows here. We close outside, but we started getting acceptance back inside. And so now let's continue with the replay on the 30-minute chart. That was a nasty one. Look at that. We're still within this range here, okay? That's your mid of the range there. That's your range low, that's your range high, that's your mid. Everything in between here and here, if you're not a good day trader, you're going to get chopped out. But back above the mid confirms that we're going to go for the highs. Back below these lows, and acceptance and rejection on the underside, we're going lower down. But look at all this chop and price action between 58 and 62. And that's just on a 30-minute chart. Let's move it to the 1 hour, okay? So that's why I keep saying, if you're going to trade the extremes in these environments, because it's here where you've got a lot of aggressive buying and selling occurring. Okay, there's a distribution of price. There's a distribution of Bitcoins from buyer to seller, seller to buyer. Look at all this consolidation, and then we get the move up. Then we take out the highs. Great, new all-time highs. Everybody's excited. Now what do we do? Exactly what we did at the lows here. Okay, you want to start paying attention. All right, we're trading above the highs here. What happens now if, again, look at the candle bodies. This is on a 1 hour chart. We've broken above 1, 2, 3 consolidation at the highs for 3 hours. And if there's a lot of aggressive buying coming in on the tape, market buying, but price can't push up higher, then until that moment, sellers or the passive asks in the book are in control here, because they're absorbing any aggressive buying into this level. And so people are trying to trade the breakout. Well, whoever tried to short here, they've puked their positions, you get the pop. But again, if there's aggressive buying, you want to see the pullback short-lived. You don't mind a pullback into here, continuation, let's go higher. But the minute you start seeing price coming back into this SR level, back into this range, and we start seeing this become the supply zone, Well, if this is the range and this if we keep rejecting off here and again, then you know that this is a level where you might want to be looking to sell. Okay, back under here, you want to be selling under here, stop at the high. We could be coming back down into these lows again, okay? And all that is just a range. So notice I'm not talking about being bullish or being bearish. I'm talking about levels of execution. What do I need to see to think to myself, fuck, we're going to go all the way back down again. I want to get defensive. I may want to hedge my portfolio. I might want to aggressively, I might be a trader who thinks, right, I can probably make some good money here for a move from 67 down to 58. That's a fairly decent move. Even then, a move down from 67 down to 63 is a decent trade. You know, I can chalk off a decent 3R trade there. Short here, stop at the highs. I'm targeting the mid. There you go, boom, 3R trade, okay? Just by looking at this, I can tell that I will always yield a 2.5, 3R trade when it comes to trading ranges. Right, let's take it forward. What happens? Should we do it on the 1 hour? Let's go on the 1 hour. In fact, let's go on the 4 hour. The key thing here is what I said was you need to see acceptance above this 4 hour candle. If this is what we had in terms of aggressive market buying, but we couldn't push higher, this is now going to act as your supply zone. What do we get? We got price trading above it, took out the highs. We've got to see acceptance above 68 if we want to go higher here, okay? Swing fail, sell off, puked, okay? Whoever built positions in longs have got fucked. Anybody who had stops under here, this is what's caused our second spike down. Cascading liquidations. Where did we trade into? Straight into the mid. Which context are we in? In a range-bound environment. We thought we were going to go to new all-time highs and keep going higher. The market tricked us once, fooled us twice, sold off back into the mid. So we've taken liquidity from the lows, we've taken liquidity from the highs. Probability is that we take the liquidity from the lows. What happens thereafter? You're looking for an underside retest. Sell off, okay? Is what I recall what happened. Something along those lines, all right? So when you look at the context of what I've just explained and why you've just got to be a little bit sharp over the coming weeks, okay? You'd have to be looking to time the tops or looking to time the bottoms. You just got to understand, all right, if you look at the structure here now on the daily time frame, and you'll see some of the similarities. Now, again, I just want to reiterate the point that I made, that I'm not using this example to show you, oh, guys, look, you know, low IQ, we had a fractal that looks very... No, it's not about that. It's about understanding context, understanding where you want to do business. What do you need to see to get into the trade? What do you need to see to get defensive? And any good trader is always thinking about, objectively, about any potential downside risk in the market at any time, okay? And so for me, when you look at price action here, previous highs, stalled above the highs, pull back into the lows, into a good level of demand, okay? What did price do? Rally, took out the highs one more time, okay? Look at the candle, 1, 2, 3 rejections, okay? Then we start trading back. The key for me at this point is this level here, because this was our candle body high. Capping price was the deviation, okay? Resistance, 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 thrust above, support, support, support. If we get back inside here, we're going to trade into this level at 57s. Remember this type of context and how you would trade it. Okay, I've gone over the scenarios. Now, when you look at what I've just explained here, and you look at the similarities as to what we have here, okay, two highs, we had a high, we pull back, shallow pullback, another shallow pullback. We're trying to push for those highs again. What do you do now in the instance that if this is our key SR level, this is our key SR level, you know what you're looking for now when it comes to the potential downside scenario, okay? In terms of the supply zone, if we just come back to 2021, in terms of the supply zone at the time, on the daily time frame, okay, it was this candle here. This up candle was the initial supply zone from where the market rejected from. We couldn't break out. It was short-lived. So if you want to see acceptance, you really want to see price taking off the minute we get above. We don't want to see price stalling like this. And then the key SR level, if I just get slightly tighter here, candle body high, SR, 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 that's your sign of weakness right there. Okay, this candle down. You can drop down onto the 1 hour chart. You'll probably see it clearer for yourself. Go ahead at some point, do some back testing. You'll see it there, okay? I'm not going to search for it now. So in terms of the daily then, again, if we're going to go higher, great. We can all celebrate. But if the market's going to take the highs like it did here and reject, then you've got to be open to the possibility that, hang on a minute, we could still be in a larger range-bound environment, okay? And so the trend on new prices or higher prices will have to wait. So I'm just covering the downside scenario. I've covered the upside scenario. You don't want to be shorting this shit until you have a very good reason to short this shit. Or even hedge out, I should say. I shouldn't really use the word short. But in terms of candle bodies, again, when you look at price here, we traded above. We've got our daily supply zone here. What do I need to see for trend continuation higher? I need to see this SR level. And what I don't want to see is a candle do this, and then another candle do this, and then another one, do this, but there's no continuation. Instead, we're going to drop back inside to this 109 level. Now you've got a decision to make, okay? Are you playing defensive with a stop at the high? And this is your key pivotal level here, okay? Because if you get back below here, we're likely to come into this level. Now you've got a problem, okay? Because now this is that same SR level, which price can't seem to hold. We get back below here, we're going to come, I think we come back down into 97s. Potentially back down into 90K. Because at that point, as far as I'm concerned, in terms of the range, as I marked out before, that's my range high. This here is my range low, okay? In terms of a high time frame range, this is the other part of the range, okay? The other level that I'm focusing on. So that's what I'm looking at, okay? That's the risk to the downside if it sets up. If this is rejection and absorption and exhaustion in terms of prices unable to push higher, absorption if there's large aggressive buying volume coming in which has been absorbed by passive sells, these longs up here or these fresh longs are probably going to puke. Any longs under here are going to be forced to close out their trade to take profit. We come back into 106s. All right. Is that clear? Does that help? Are you all awake? Have you fallen asleep? So 3 levels that I'm really looking at here. These range highs. This key SR level here, because you can see where price was being capped. It was being capped. We've pushed above it. We've got the expansion, okay? I think we could very well take out these highs. After that, we'll have to wait and see. Hopefully we go higher. And if we don't, then we have to accept that there's a possibility that we're still going to be range bound between 90K and 112. Okay, that might be the range. And if it isn't, then we can probably celebrate trend continuation higher. So I've given you the scenario for continuation. I've given you the scenario that I don't want to be chasing longs here. I've given you a scenario for a deeper pullback, okay? We'll have to wait and see. But the zones that I've marked out are relatively clear now in terms of range high, range low, in relative or in relation to this price action here, and you have a clearly defined mid-range, which is coming in there, okay? Doesn't get any cleaner than that. It really doesn't. And so for me, it was a blessing in disguise to be able to trade and long this again. Hopefully I can take the remainder of my profits at that 110.78 level. Any questions? Let's have a look at the 1 hour time frame now. When we go to the 1 hour time frame, again, it's been a really good move. This is the supply zone that we're in, where price was being capped previously. You can see this here. Distribution, rounded retest, okay? I'll show you what the subtle trick is here. Look at the expansion of this candle to the downside, okay? So this was the shift in structure here. This candle low where price pushed up. This was the high before we pushed lower. But what was key in terms of context was this swing low here. The minute we see this thrust through this low here, we're looking for a rounded retest. Okay, so this what this is essentially what people call a fair value gap, all right, where we've had a thin move. So what you're looking for is price to come back into this thin move here. If I just highlight this in pink, that would be your FVG, okay? Fair value gap. I call them inefficiencies. ICT fanboys call them fair value gaps. On a market profile chart, this is what a bunch of single prints would look like. If I just do it as red, and if I extend the line right, and if I just say, all right, let me take the top of the fair value gap, this is the level where I need to see price reject if we're going to go lower. If we can find acceptance above this level, then we're probably going to go higher, all right? And so when you look at this, what did we ping? We literally tagged and filled in the fair value gap, and then we pushed away down into demand, okay? I've never watched ICT, probably one video for 10 minutes, but from everything that I've gauged and understood for all the ICT fanboys, that's your fair value gap trade. And then equally on the downside, oh, look, fair value gap into a demand zone. To me, it's just a fucking demand zone and it's a thin move. Yes, you're going to get price rip through this level and you're going to see a reaction ideally from this demand zone. Because again, the key thing here is look at this high, just like we did here. Look at this low and look at the thrust through it. So again, look at this high and then look at the thrust through it. Throw any test back of this level, ideally you want to see a reaction. But if we trade through that level and hold and go down, then it's fucked, essentially. All right? So fresh test of supply, fresh test of demand, fair value gap, market inefficiency, single prints, whatever the fuck you want to call it. And so here we are, back at that same level. This is why I've taken profit or had limits which I've filled. We're into resistance. Okay? Next question is, where's support on the lower time frames? For me, it's this level here. This is going to be a massive level. Keep an eye out on the 106 to 105.8. That's the zone now that I'm watching for a potential pullback, all right? Because if you think about it, if I just clear the chart again, in fact, I'm not going to clear the chart. I'm going to leave everything, just clear these up. You've got your range low. You've got your range high. We've got our mid. It's essentially here. There we go. Okay. Because when you just look at price from a value perspective, okay, in terms of value, if that's your range high, that's your range low, where is 80% of time being spent in the chart? It's not at the extremes, it's generally in the middle where the chop is, all right? The extremities are for a mean reversion back into the mid, range low, back into the mid, okay? Back into the mean of where the majority or the 80% of the time where price is spent. But the 20% is where prices has been short-lived and it reverts back into the mean. And so when you look at Bitcoin here, what do we have? We've got a very nice range-bound area. Okay, where the majority of the price action has been in this zone here. Again, when you look at the extremity, that's an extremity outside 80% of the range, okay? That's your 80%. 20% and 20% here, okay? Fade, low. Low, back to the highs, okay? Highs, back to the value area low, and so forth, until you see a shallow pullback, okay? So price breaks up, shallow pullback, back above. Now you can start thinking about, all right, we're getting a shift of value outside of here. If we can start pushing up, we're going to break out, okay? So in terms of a range of this whole area, there you are, okay? This is one range-bound area. This is the other range-bound area. And for me, what I was looking for was 109. So when I said, I believe, I suspect the range that we're going to get is between 100 to 109s. And this is why this origin here was the origin of the underside rejection into a sell-off. Okay, this is the immediate range that we're in. So had we rejected from here, I was looking to buy 103s again. Okay, I would have got stopped out on my long under here, because why? Market structure, break in market structure. Okay, if it's not short-lived and go higher, then it brings 103s into play. The fact is that we are now pushing up into the upper bound of the range, okay? So again, when we think about value areas, well, we don't have as much data up here as we have had down here. And so again, if this is the extreme 20%, and this is the lower bound of the 20%, if you look at where the majority of price has been spent in the past, it's all in this region here. So if there are selling opportunities here, if there's any buying opportunities, it's going to be here, okay? And I'd much rather look for buying opportunities than try and be a hero and step into the front side of this trade here. That's not what I want to do. I don't really want to be stepping into the front side of this. The only way I'm going to step in front of this is if I see some form of distribution, another pop, gets back inside. I'm thinking to myself, right, short 110, stop up there, come back into here, trade done, start looking for longs. If this fails, fuck it. Stop at the high, underside rejection, short, down into the lows again, okay? And we're playing that entire range. That's all there is to it. Let's move on to Ethereum. ETH/USDT looks very decent. Now, again, we're just into that resistance level. So again, 1, 2, 3. Are we going to get another push up? 4. And then what do we do if it rejects? Then what? Okay. If this rejects, then essentially for bullish continuation, or well, trend continuation higher, let's just assume we reject here, we get a pullback. You want it to be a shallow pullback. Consolidation, then we can say, right, all this was reconsolidation. We get this shallow pullback, just like on Bitcoin, as I showed you in the November 24 example, and we start breaking up, you should see this low hold. You're going for these highs and taking these out. When you zoom out, it becomes very, very clear. Okay, so I'm not sure which way Ethereum is going to go, because if you look at the higher time frame, we are into a massive level here. So the key is very simple. I think acceptance above this level here, we should not fuck about. Okay, I think acceptance above here, I think, look, just like you just seen on Bitcoin, okay, all this move down here, in my opinion, is really weak resistance. So we had the consolidation and then we saw the continuation. Now we're getting the inverse. Look at this. All this thin inefficiency was easy to trade through. Look how price just glides into this level. Now we've got a level of resistance, okay? So this is all resistance. If we can get above here, we're going to fill this in very, very quickly, in my opinion. And I would be looking for 3,400, 3,500. Potentially with the stop at the low. If there's a run of these highs and we get a shallow pullback, okay, taking the mid of this range, range low, range high, mid-range, you can buy the pullback as long as this mid-range holds. Long, hopefully it flips resistance. If it does, there's really not much in the path until around about 33, 3,400. If we break down, I'm buying 21s, okay? Because resistance, 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 SR, okay? Resistance, consolidation, sold off, reclaim. If there is a pullback, that's the pullback to buy. If there's a shallow pullback and you're looking for the breakout trade higher, I've just covered that scenario here. I'm not going to map it out in detail, but I've given you kind of the context that you're looking for, and much of this really depends on what Bitcoin does, okay? Is that clear? The problem that I've got on altcoins is, and I'll go over it in a second, let me just look at the moving averages on Ethereum. The daily looks fine, okay, we compressed, but we've pushed above it. So that tells me, all right, fine. As long as these lows hold, you know, you could start chasing this. But the minute you get below the bands, well, I think we probably trade into this level here. On the 3-day, looks good. On the weekly, looks good. It really looks fine to me, in all honesty. It's looking a lot better than it did a few weeks ago. So again, when I look at the weekly here, what the key thing for me is this here, look. Look at these rejections in terms of price, but why are we not seeing expansion to the downside? Why the fuck are we still compressing under resistance? So is this distribution or is this consolidation before we see a move higher? Now, what gives me confidence, again, if you look at the weekly moving averages here, we are seeing almost a form of compression. We're almost there, guys, okay, in terms of just like we saw continuation higher here, just like we saw consolidation, continuation high here. Look at the consolidation here in 2024. We're back at those levels again. So either we're going to be range bound for the summer, or we get the breakout in the coming weeks into July, okay? Remains to be seen. So for me, bias or contextual bias, nothing clear yet, but it looks encouraging is what I want to say from a weekly time frame. Where I would get cause for concern, not cause for concern, but where I have to accept that, okay, fuck, this is going to go lower, I have to be a buyer lower down, is essentially price coming into this level here, okay? Below the bands, then you've got to be open to the possibility of 21s. Let's look at Solana. It gave me the pullback that I wanted, okay, into that 140 level. That's the level that I wanted in terms of the pullback. This here. We've got that. We've got a decent reaction. Now, the thing is, right, if Bitcoin, let's just assume Bitcoin gives a correction. Let's just assume it goes from 110, 111, 112 back to 106s. I think that in that case, if that happens, okay, again, just using the simple concepts of a range, that's my range low. This above here is my range highs. So where's the mid? We've got a very clear mid level, which could act as a resistance, right? And that comes in very nicely at this key SR level here. So you can see that Bitcoin is coming to resistance. Ethereum is coming to resistance. Solana is coming into resistance. The question I'm asking myself is, all right, fine. There's two scenarios that I'm looking at here. I'm not sure I want to short any rejections off here. I'd much rather wait for this. Okay, give me a rounded retest. And I think we're long to 180s, potentially 200s. Because in terms of price action, we've sold off. Okay, this is where you want to, or should have been bearish. We have now pushed up. For the first time, we've got consolidation, expansion, deeper correction. If we're going to be bullish, then this rejection has to hold. If we do get a rejection, you want to see a higher low or a swing fail, okay? And then you can say, right, we're going to go for these highs here. And when you zoom out of everything, so if I just keep it very simple from a high time frame perspective, if I go to the daily and Solana, I think in terms of range-bound price action, these highs here, that's where I'd be looking for, okay? And in terms of extreme lows, well, you're looking at this here. And so for me, it's not alt season as such, okay? It's just trading price action. There's opportunities to long. There will be opportunities to short at the extremes. If I see Solana give me a pullback lower down, then the whole concept of value comes into play. If this is our 80% of the price action, where we see the extreme down here or the extreme above here, I'm a seller above here, I'm a buyer up here looking to trade price back up into these highs. I'm a seller up here looking to trade price, well, to the mid at least, then back down, okay? But intra price action within this range, I've clearly stated that, look, if we get resistance here and there's a pullback, I'm longing this back into 160s, potentially back into 180s again, okay? So what I've just showed you there is a range within a range, essentially. This is not an alt season, okay? It's just rotational price action, whichever way you look at it. This is an alt season here. Whether this is going to pull back, that's an alt season there, okay? This here and all this shit here is not an alt season or an alt cycle. It's just very good trading opportunities to play the rotations back and forth. Mean reversions, rotations, oscillations, call them whatever you want. Range bound price action at its finest. All right. Right, any last questions? Because I want to call it a wrap. I want to hop off stream soon. I've been on here for the best part of an hour and a half. But hopefully I've given you enough food for thought, ways to really think about price action here, ways to, be optimistic about higher prices, but also remaining cognizant of when to essentially think about becoming defensive as well, all right? Keep your emotions calm if we start seeing new all-time highs. Because if it's short-lived and we drop back inside, then there's a real possibility that we could oscillate back towards 90k, all right? That's all I'm saying. Just remain level-headed. Fuck the timeline. Forget what people are saying. Just remain level-headed. It's your money. It's your capital. The first thing you want to be thinking about is preservation and drawdown management. Do that well, and you'll have a very good career in trading. All right, one last chart. ENA, yes, because I'm buying ENA. I've been buying ENA. I've been dollar cost averaging in. I think it's a very nice chart. Now, this is one of those charts. If you're expecting me to say to you guys, buy ENA, I think we're going to get an alt season next week. No, fuck off straight away. That's all I'm going to say. If you've got patience like I am, and you're dollar cost averaging into a play like this, and you're ready that if shit hits the fan and this goes to 20 cents, You know, you're not going to be, oh yeah, exoshielded this fucking coin and it's tanked 50% in a day. If the market's going to drop, the market's going to drop. Now, for me, my plan is very simple. I've been a buyer at these lows. I will continue buying at these lows. And by no means am I endorsed or paid or, you know, whatever fuck you want to call it, have I been told to talk about Athena. For me, the scenario is very simple. If you look at a Circle, right, listing at silly valuations, and if you believe that, look, stable coins are here to stay, and you've got companies who are, you know, listing on the stock exchange, you've got Circle, right, listing on the stock exchange at a high valuation, then what does that mean for the broader market in terms of those projects that are highly correlated or built upon the premise of, or the fundamentals of stable coins? Okay, so for me, when you look at Aave, when you look at Curve, when you look at Athena, and if Ethereum takes off, then I think Athena serves as a fantastic beta play to Ethereum. And so for me, I've been, in all honesty, I've been buying at 30 cents, 29 cents. That's where I've been doing my business. I now have 50% allocated. When I say 50% allocated, I'm not talking about 50% of my net worth is in Athena. I've allocated 50% of my total allocation for what I wanted to pick up or purchase in terms of Athena. I've been slowly chipping away at these lows here. Okay, the other 50% that I wish to buy is either going to come lower down here, right? For whatever reason, you never know when the market's going to sell off, or I start trend chase. If we start pushing above these highs, and we get into a trend, I'm going to pile in here. Okay, so if my average cost price is 30 cents right now, and price, let's just say, worst case scenario, price drops into 20 cents. Then my average basis is going to be 25 cents. But I'm not going to buy if it's dropping down. I'm going to buy once it gives me a reclaim of this level here. Then fine, I'll start buying at 20 cents. I bought in at 30, I'll buy in at 20. It gives me a dollar cost basis of 25. If I'm buying at 30s, I'm buying in at 45s. That then gives me around about a dollar cost average price of 37 cents, which is around here. So I'm still within this range. And my average is either going to be at the mean of the range, or it's going to be at the lower bound of the range. But I know from an asymmetric point of view, as long as this project doesn't go to shit fundamentally, well, guess what? Look at the asymmetric return to the upside. So for me, when I see these big rounded bottoms, this is opportunity, okay? This is the shit that I live for when it comes to buying altcoins. This to me is, if you want to buy into altcoins, looking for those 3, 4, 5x's on projects that have got very good fundamentals, and this is one of them that fits that description for me very nicely. And then when you look at the moving averages, the daily, I didn't have any reason to buy this shit until I saw this first period of green, okay? Sorry, this first period of green here. When I saw this and price pulling down, look at the compression of the bands on the daily. Look at the velocity and the trajectory, and then look at the momentum, the seller momentum slowing down. Look at the candle bodies at the lows here. This is what you want to see in terms of seller exhaustion, okay? Then we get a rounded retest of those lows. Just like we did here, look at the seller exhaustion, small body candles, okay? Then we flip, showing a sign of strength, retest. Look at the shift in trend. So the key for me here, and like I've explained previously, is that when you start seeing a shift in momentum, if you look at price action here, where look at this period of red, and then we get a shallow period of green, this isn't a reason to buy because it's very short-lived. Price is in a range, it's chopping up the bands. We break down, sell off lower. Still no reason to buy. Oh, look, a period of green. But the key thing is, look at the period of red relative to the period of green. The red is far extensive. The green periods are very short. When you want to recognize strength, you need to see this flip where the selling momentum or the red momentum because of the crossovers becomes very shallow, and the green momentum for the first time exceeds the relativeness of selling here, short-lived. And not only that, you get a shift in structure. Now you know it's time to buy Athena. So if you followed me last year, you will have noticed that I was very aggressive on buying Athena at that 23, 24, 25 cents level. Where did I sell it? I sold it at $1, okay? Because then you've got the shift in trend. You're going for these highs. It traded $1.30. I got out at $1. That was enough for me. That was a nice 4.5x multiplier. I'm looking for the same again. When you look at price action here, right? Anybody who's been shilling Athena, all this bullshit, okay? Pain. We get a small period of green, but we're still within a range. There's nothing really to do here. Now we finally drop into the lows. Now I'm interested, okay? Because for the first time, we have a longer period of green, a very short period of red into this range low here. Now we've flipped green. Look at the green phase in relation to the previous red phase. If this is now going to become bullish over the next 2-3 months, any pullbacks into here are for buying, okay? As far as I'm concerned. Then once we get that shift in market structure, higher high, these bands will become green because look at the compression of the bands. This is on the 12-hour, on the daily. Again, this kind of summarizes what I've just been saying. For the first time, we are seeing a nice period of green. If this red period is short-lived and we flip green again, we're going to get a break in structure. We want to see a higher low, consolidation, and then we're off to the races again, okay? That's what I think will happen. And my time horizon for something like this is 6 months, okay? If this doesn't happen in the next 6 to 9 months, then I don't know what's going to happen in that case, because my thesis is wrong. I fucked up on the trade. Well, I haven't fucked up on the trade. The trade never worked out, essentially, okay? But I would take this trade 9 times out of 10 if it's going to set up to become a very good trade. The problem is most of you don't have the patience to sit through the accumulation aspects. If you want those big returns, then you've got to start building positions or finding a way to build positions. Don't start chasing Athena when it's somewhere up here, because then you're fucking yourself, because now you're buying at 90 cents to double your money. It's got to go to 180. And then you've got this downside risk of like, what if it stalls out here and it comes all the way back down to 20 cents? You bought at 90, are you going to capitulate at the lows? So asymmetric opportunities often comes at these lows if this is a very good opportunity to buy. So that's a decision that you've got to make. I can't make that decision for you. If you think altcoins are going to go lower, then that's on you. If you think altcoins are going to go higher, that's also on you. It's not on me. I'm just explaining why and how I'm looking to position into something like Athena and why I've been picking it up. Again, not being paid, not endorsed, no association with the project, never spoken to them. So that's all I can tell you here. Okay. And I hope, I really hope that for whatever reason, markets do fall off a cliff in August, September, and that we do get a real shakeout or selling event into this back above. That for me is brilliant. I'd love to buy this and load up, because then my dollar cost average becomes 21, 22, 23, 24, 5 cents. I'm buying the literal lows here in the view that I think we trade these highs. That is what I would load up on, in the view that I can pull a very comfortable 4-5x, maybe more, okay? And if it doesn't, then fine. I'm wrong on the trades. I own the losses like a man. I'm not going to bitch about it. Okay? Does that make sense? So the key thing with Bitcoin here is, if you look at this market profile, we had a naked point of control here. This was the value area high from the high on the 22nd of May. So this was the all-time high here. We opened at 111.5s, traded above. The minute we got below the value area high, you can see you'll see this on this chart here. So there's your P-shape distribution, okay? The minute we found acceptance below That's your value area high. This is what was capping price to the upside. That became your resistance. Value area low, next day value area high. You've got your naked point of control here as well. There's a naked point of control at 111s. Or I think it is. Yeah, it is. And so you can see where we rejected from previously. This was your... Shit, let me do that better. I'll do that in pink. This was your resistance. This value area low. Next day is value area high. That's where price is finding acceptance back below that level. There's your resistance, okay? And then what did we do? We traded into a bunch of single prints here. Right? When you think about fair value gaps and inefficiencies on a market profile chart, it's where you've got these single prints, just one single TPO block, okay? One of these is called a TPO, time price opportunity. Each block generally represents 30 minutes. When you look at this TPO here, and again, this is another reason why I was looking to long this level, okay, from the top of the TPO, which was around about 103s, 102s, 101s, all the way down to 100. And the bottom of the TPO was at 99.9, so call it 100. When you look across the line, we took out all the lows. There we go. We tagged it on that day there, okay? Last week. Can you see that? We came into 100 and 100, right at the low 100s. But we tagged, almost tagged, and found a reaction from the single prints, taking out all the previous lows. And now we're gravitating back towards that same area, and look at where we've rejected from today. With this was a naked point of control, because reason we say naked, because it hadn't traded this point of control on the way down, okay? It became a naked point of control. And so I marked this out, and today we've traded through that level, and we've rejected from where? That same supply zone, okay? That we rejected from here and here. And that for me is the reason why I've taken profit on the longs, okay? Or on most of my longs, I should say. So that's a very quick insight into the market profile chart. And there is still a naked point of control at 111.1, 111.2 as well. So just something to watch out for. If we do get another push-up, whether this level here becomes a point of rejection, and then whether we find some sort of oscillation back down into, again, here's the other nice aspect of this. If you look at the previous price action, can you see these profiles? Each one of these is a daily profile, right? Value area low, value area high. This is where the majority of the time price is spent, okay, for that given day. The next day, and then the day after, and then the day after. So what have you noticed at price, if you really think about it? If you look at all the value area highs, there's one here, there's one there, there's one there, there's one here, there's one here. This in itself is kind of like the range highs, where you've got the deviation above the highs, and then equally in terms of the value area lows, value area low, you've got two here, you've got one there, you've got one there. So you've kind of got a median point of this being your value area low. And so what you can do is, if I take it back to this day here before we had this expansion, let's just take 1, 2, 3, 4, 5, 6, 7 days of price action, right? You can merge the profile into a composite. Merge with the previous profile. These 2 days combined together. Now merge this with this here. and so forth, until you have a 7-day composite. And then again, because you've got price action contained within a range, you can create a composite which tells you where the value area high of this entire composite is and the value area low. And so what you find is that the value area low is at 104.2 and the value area high is at 1.58. If we find acceptance below here, we're going to trade into the single prints. That's essentially what I had, all right? On my chart during the week, last week I should say, I said that if we find acceptance below value area low, we will probably take out the poor highs and then look for the single prints, which I called SPs, okay? That's what we did. The minute we get above 105.8, you're looking for expansion to the upside now, okay? Because all this range where prices deviated the lows, well, we've taken the liquidity from the lows. We should be now pushing to the highs. So if you look at this, very clean expansion to the highs. That's our value area high here, where we deviated resistance. We tried to push above it, but look at that expansion, okay? This is a distribution day or a trend day, essentially. And where have we tagged? The previous point from where the market sold off, before it found a level of a balanced bracketed environment here, okay? So that's a very quick, probably bastardized version of market profiles, but I've tried to simplify it in a way without making it sound fucking complicated, because it isn't. But I've tried to simplify it in a way which hopefully makes some sense to you guys. And then if you want to reset the profiles, you just say reset all mergers and splits. And when it does it, there you go, okay? And if you want to know what my settings are, then fine, you can have my settings as well. Settings, there you go. All right. Block size 30 minutes, row size manual, ticks per row, value area 70. You can have the value area as 80 if you want. I prefer 70. There's my gradient colors, opacity. See that? Opacity outside value areas, okay? You can see that there. You've got point of control. So if you want to display the point of control, the orange lines, okay? If you want to display poor highs and poor lows, if I just say, okay, let me do one in pink, then it should mark out the poor lows. There you go, okay? See that there? It marked out the poor lows for me there, okay? Just to prove a point, if I do that in I don't know, let's do it in yellow. There you go. You can see it'll even highlight where there's some poor lows. So you don't have to look at the chart and think, yeah, shit, where's the next poor low? I can't find it. It'll mark it out for you this way. So you know what you're really looking for, essentially. Unfinished auctions, okay? That's what it is. What else? What else? Remove that. Value area high, value area low. I've got the open marked, okay? You'll see this one, deselect that on the chart. Value area high, value area low. Initial balance range, IB range, two profiles, okay? The first hour of Bitcoin generally forms the initial balance range or the opening range. And then show volume profile, that's for the volume aspect. I think that's it. Everything else I've got switched off. All right, guys, I think that's it. Hopefully you all have a fab week ahead, and best of luck with your trading for the remainder of June. Catch you on the next stream in July. Have a good time. Take care. God bless. Bye-bye.